Hello, everybody, and welcome back to How to Blockchain. I'm joined today by two exceptional people, Rob Massey and Amy Park. They're working at Deloitte and they work in the tax and accounting side of blockchain and cryptocurrency. Messrs. Musk, Saylor, and Dorsey have given us a lot to think about in recent weeks around the role of Bitcoin on the balance sheet or around cryptocurrency and crypto assets in the corporate world. And Rob and Amy are going to help us break down how to think about it. Rob, let's start with you. What do you see going on right now, and why is this so important?
Anthony, thank you for having us, first of all. But what we're watching is a growing number of players embracing the transformative nature of blockchain as we've been watching it for a while. But more importantly, the headlines are filled with corporates embracing digital assets. They're embracing it as an investment category, as a new asset class. They're looking at using it in their trader business, and they're looking at digital assets as programmable money, able to execute commercial activities differently than you can with traditional fiat.
Got you. And it feels like a bit of a mix, right? In some cases, there's speculation that this is about just sort of making money. It's an asset. We'll grab some Bitcoin, hold on to it for a few minutes, and then get rid of it and make some profit. In other cases, we're talking about it in a much deeper level in terms of payment or treasury. Amy, what do you think are the trends that are driving this? What else is going on around us that's helping to bring this through?
Yeah, Anthony, you touched upon it a lot. We're seeing it in a lot of different ways, and I think it really depends on the entity and what the entity is really focused on. But one thing that's really clear is that Bitcoin and digital assets is now becoming a recognized asset class. Where several years ago, I think there was a lot of skeptics, and now that you have some of these big players that are coming in, more and more companies are feeling safe, feeling like it's okay to invest. And some of them are looking at it from a perspective of treasury management. So this is what we're going to use, particularly thinking that they can use it as as a type of a hedge. And then others are thinking, well, let me try to get into this asset. Let me diversify my portfolio. Look at this like just any other type of investment, and see what returns we can get. And I think as companies are starting to get interested in digital assets, the best way to learn is to own some yourself, right? And so dabbling in it and starting to understand what the technology is and how that's being used is another way that some companies are thinking about it. What we see, as there's more widespread adoption, people are just curious. So I think a lot of companies, even though they may choose not to invest or choose not to engage, they're certainly thinking about, should we, or having a point of view on what we should be doing.
100%. And that dabbling comes in different forms. I mean, Tesla putting in $1.5 billion into Bitcoin is a very, very different model than just playing around with some Doge on the weekend. But Rob, from that perspective, in terms of helping manage digital assets, I guess there's a huge amount of considerations of what in the traditional corporate world needs to be considered. What are the things that you're advising your clients on, or what are the things that you need to think about when you're holding digital assets as a corporate?
Yeah, no, it's a good question, Anthony. And you think about a large scale enterprise, they've already got processes and systems and teams set up with muscle ready to handle unique transaction types. Think about engaging with digital assets as sort of juicing up all of those muscles and looking at something entirely new, looking at all of the tax considerations in a world where there's very little clarity, and the pace of innovation is out there in front with the regulatory environment not quite there and ready to handle it. You see the same thing with accounting. How do you account for digital assets, and disclosures? You think about risk and control frameworks set up to deal with something now that just doesn't quite fit with the rest of what's going on. When you see each of these competencies then engaging, and their own world is a little bit different, they have to also listen to one another with a different lens, just because everything is its own challenge. Yeah.
Gotcha. And Amy, I'd love you to come in on this one, because I know Rob mentioned accounting here. With a volatile asset, with holding crypto in wallets, and also with asset values going up and down, and atomic swaps, and the ability to hold and move, and even getting into the DeFi space as well. There's a lot to play with from an accounting perspective. How does this differ, or what are the things that you get your clients to focus on specifically?
Yeah, so Anthony, the accounting in this space is a little challenging, and largely because the accounting rules that we're dealing with today, they weren't necessarily designed to think about, digital assets or things that are not tangible in nature. And the accounting rules, depending on which jurisdiction you are, could vary. And so in the US, most of the companies that are starting to invest, they're going to have to account for these assets as intangible assets. just because of the fact that they're not tangible in nature and they don't fit into the traditional they don't fit into the definitions in the accounting literature for some of the other asset classes. And that intangible asset model is a cost subject to impairment model. So what that means in simplistic terms is that when the asset value goes down, you get to write that down, or you have to write that down. But when it goes up, you don't get to do that. And so the accounting here is really important, because what investors will see on financial statements and balance sheets may not necessarily be representative of what the company feels their economic value of that investment is. And so they're going to have to think about how to, explain that to their investors and disclose that information. When you flip over to starting to use the asset in your business, the accounting is also challenging there, because you're forced into this intangible asset model, but a lot of companies are using that asset like a financial asset. So they're using it as a form of payment, receiving it as a form of payment. And that turns into some challenges in how do you think about revenue recognition? How do you think about the volatility, and leads to potentially derivatives that end up getting confusing in how you report information. And so the accounting here, I'd say, different than some other assets. You really need to understand that before you jump in, so that you can see the different implications in your reporting.
Got you. Thanks for that, Amy. And I think it gets interesting because, with the traditional investment asset classes, they don't often swap over into payment vehicles, right? You don't see a lot of people rocking up to a Tesla dealership and dropping over bars of gold, right? Or nuggets of titanium, or whatever it might be. Whereas with Bitcoin, I think it could be materially different. And so you're then transferring from an accounting perspective, and then also, I guess, into tax and some jurisdictional considerations. Rob, I know your favorite phrase is "what's the thing?" But above and beyond that, we heard that on the show last time you were on. What are the main tax considerations from a corporate perspective if you're getting into this space?
Yeah, no, it's right, and it does vary a lot by digital asset type. When you start on the investment side, the two main things to think about are that digital assets. Many think that they are fungible, such that if you have an investment strategy that builds or ebbs over time, you want to make sure that your digital assets are appropriately segregated into different. We talk about wallet structures or addresses, such that you can respect the Bitcoin that you bought at 10,000 versus 40,000 versus 58,000, and make sure that if you choose to do something with it, you can recognize gain in the appropriate tranche versus being bound by FIFO, first in, first out. So segregating the assets such that you're able to differentiate is critical. The other, from an investment side, is that if you choose not to go at it yourself, but rather use an investment vehicle, there's a lot of care that's taken to make sure that you don't trigger gain or loss when you enter or exit those investment vehicles. That's different than traditional securities and commodities that we've grown up with today. And of course, the rules around the world differ. Once you move to using the digital assets, just like you said, it's an unusual, that's one muscle we don't usually use, moving something out of a treasury asset into a payment function, but that does happen today. And so looking at character, looking at unique treatments of sales tax or VAT around the world, and how the different taxing authorities say, you're going to charge somebody, for a product or service in Bitcoin, you need to charge them in, charge sales tax, charge VAT, a collection agent. Most agencies around the world, they don't take Bitcoin. So then you need to have that mechanism to convert to fiat and remit to the appropriate agencies accordingly. So think about every cycle in your program, in your enterprise, having to be re-envisioned with digital assets.
Got you. And I imagine
Rob,
it gets more Oh, sorry, Amy. I was about to say, I imagine it gets more complicated, because if in a world where you're doing crypto to crypto between different entities or different enterprises, I think it becomes a little bit more easy, right? But actually, if you imagine you're going crypto to fiat to crypto back and over again, you're actually making the landscape more complicated before it gets easier. But as adoption grows, eventually it starts to become less of a worry.
For sure.
Sorry, Amy, you were going to jump in on that. Come on back.
I was going to jump in because Rob talked about investment vehicle. And I think, back to your intro, Anthony, of what's the thing, what the thing is really important when you're thinking about accounting too, because when you're investing directly in Bitcoin, that's one thing. If you're investing in a fund that holds Bitcoin, that's another thing. If you're investing in a corporate entity that invests a lot in Bitcoin, that's a third thing. And all of those things have different accounting. So what the thing is also very important too.
Got you. And where would one find a blockchain and Bitcoin literate accountant in 2021? Is this something that, is this something that we're starting to roll out as kind of basic training these days, or genuinely is this still quite a niche skill?
Well, to
We
Amy's
are rolling
credit,
it out.
to
Go
Amy's
ahead, Rob.
credit, Amy is the crypto accounting ninja of Deloitte, just to be clear. And
And
so,
this is my point, is actually that you guys are, unbeknownst to most of the world, the people who have done the most in this space out of anybody I think I've ever met, and also previously had the pleasure to work with. So I know there's years of experience behind you, but I was really interested from Amy's perspective. Do you get young accountants coming through saying, help me understand, how can I work crypto and cryptocurrency into my tool set as an accountant?
It is. It is. It's a hot topic, especially at universities. They're really excited about it. We do a lot of work with a lot of the different universities and the accounting departments. And over the last, I'd say 3 years, we've started adding specific cases on accounting for crypto. And so it is something that, our younger professionals are really interested in. I'd say, I have a lot of people who support me on the accounting side, and all of them are people who just volunteered because they're excited about this stuff. So there's definitely interest. Yeah.
yeah.
Well, I'm sure it starts with the volunteers, and then the kind of groundswell moves into something that's a little bit more kind of machinated and deliberate, and then eventually it becomes institution wide. So it's the volunteers that get it started, but it feels like we're on a little bit of a journey. I wonder if we can do just a kind of a quick hop back to what are the key learnings that you guys have taken away from this? I know, and Rob, Amy, you've been working in and around crypto and exchanges and blockchain for years now. Over that time, what are the kind of key learnings for organizational listeners, people from corporates or from government who are looking at this from the outside in? Over those years, what are the key things that you wanted to share? Amy, I'll start with you.
Yeah. So I think, Anthony, one of the things that's been really interesting for me to see and experience on this journey with some of our clients is that muscle that Rob talked about, it's flexing in all different ways. And so, I think a lot of investments or asset classes or things that companies are exploring don't necessarily require so many parts of the organization to work together, as well as work internally and externally as this. So because this is an emerging area, there's so many interdependencies. Rob and I have conversations all the time about how accounting and tax sometimes work well together, sometimes don't work well together, but having to work within an organization to understand things beyond your competency, I think is something that's challenging for a lot of people. Usually people want to stick into their own space, but here you really learn about the other competencies and having to work, collaboratively within, as well as it's an emerging area, right? And so you need advisors, you need external counsel, you need, people who can help you with the accounting and the reporting and what's changing from a regulatory perspective. So having to work, both internally and externally. And then you can't have a set it and forget it mindset. There's constant change. The industry is evolving. And so monitoring that and staying on top of that, I think it's challenging, but definitely doable. You just need to know going in that that's, something that you're going to have to expect.
Gotcha. And Rob, it wouldn't be fair if I didn't give you a chance to come in this one too. Your sagely wisdom or your war stories from the last 2 or 3 years working in this space?
Yeah, thank you, Anthony. You referenced something interesting, and that is, the students coming out of college and engaging in this space. People, they want to be an accountant. Why? Because they like taking a set of rules, applying it to a set of facts, and getting an answer. What we have is we have very few rules on point, right? And you have people moving at lightning speed and the facts are changing all the time as they're iterating in these business models. And that makes a lot of people uncomfortable. We work, so it's, you got to find the right person, I guess is the first point. But we work very, very, very fast in this pace, but by analogy, if you have no rules on point. And that makes people uncomfortable. The lesson really is to make sure that the analogies that you use to different rule sets that do exist are going to work. Because if you're out there too far and later somebody comes in and disagrees, usually we're talking about fair sums of money. And so how do you make sure you get clarity on that? That's being calm, that's being thoughtful, it's playing devil's advocate, it's collaborating a lot with other advisors, it's collaborating with your partners, right? And make sure that we see all the edges and make sure you get it right. And imagine yourself in a dogfight with regulators, and how do you navigate that? Have you built the best positions possible to sustain the results that you want? And if you're not sure, go and talk to them, right? And go and talk, and you may not always get, the perfectly clear answer, but really taking those extra steps to make sure that you've got it before you go too far using analogies.
Thank you so much for that, Rob. And something I say quite often is that we need more lawyers in the blockchain space, because we're dealing with particularly challenging, regulatorily challenging things.
Yeah.
We're breaking stuff, we're creating new models, but maybe I need to expand that phrase to say, actually, we need more lawyers, tax and accounting professionals in blockchain as well. And
Absolutely.
it feels like we're already getting there.
Absolutely. And it's fun, right? Let's not forget it. This is great stuff. We're reinventing commerce as we go. And that's just super exciting to be on the front end of this.
Yeah.
100%. Well, Rob, Amy, thank you so much for getting up early to join the show. Thank you for sharing your wisdom. It's almost impossible to get all of that content, all of that learning down into a kind of 20-minute video, but somehow you've managed it. Brevity and precision also comes in the tax and accounting space, I guess. Great to see you both. Great to have you on the show, and have a great rest of your day.
Thank you so much, Anthony. Thanks for all you're doing.
Thanks, Anthony.